I think the last reading and the one before it in inflation, the one before it to a lesser extent, do suggest that we are getting back on a disinflationary path.
The HDFC Bank had released its, June 2024 shareholding, wherein they have seen FPI holdings or FIO holdings to be below the 55%.
Well, Kotak Mahindra finds itself dragged in the middle of this Hindenburg-Adani Group storm. But in a statement to the exchanges last night, Kotak Mahindra distanced itself further from the issue.
The resistance zone, I would still say, is the previous high in about 24,236. These are very, very short-term, near-term levels that we're looking at.
Concerns raised by US FDA are related to repeat violations, and it's not just for Dadra unit, but for multiple sites.
Sensex hits 80,000, and then, of course, it's cooled off very quickly after that. So that's essentially what's coming through. The markets, of course, had a relentless move higher. The Nifty, by the way, is up about 90 points.
The industry is struggling with deposit, and Federal Bank is able to show healthy growth rate over there.
Sensex scales 80,000 mark for the first time ever. And the good news is the morning has been largely steady.
Even for the last 10 years, if you look at our performance, as a company, we've grown at about 18-20% every year.
Through this entry point, as the cavalcade of the Baba left from there, the people started to gather around his cavalcade.
Let's talk about what the Nifty is doing. It's a 160-point gain on that index right now. The Sensex are 513 points. Bank Nifty almost up 2%. That's an almost 1,000-point gain on that index right now.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC TV 18 Motilal Oswal Studios in Mumbai.
Okay, well, it's another day, another good day here for the markets. This is Wednesday afternoon. This is Closing Bell. We are coming to you live from the CNBC TV 18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, hi, good afternoon.
Good afternoon. Green all over again. Just wear green almost on a daily basis, right? That's this kind of a market.
I think today it's a bit of an anti-climax actually that played out on HDFC Bank, right? Because it started off well in the green, and currently, in fact, it's actually at the day's low, because that's what pre-positioning does. Everyone, had gone long on it, or they had taken delivery, and it appears there is some give back today. So from the high of the day, I think it's down close to around 1.5%. And though the Nifty Bank actually is up close to 1,000 points, still, HDFC Bank is holding with a gain of 2%, but it's come off close to around from that 1,800 rupee odd mark. And as we said earlier, exactly 1 year ago on 3rd of July 2023, you had the stock at a 52-week high. And today as well, 1 year later, we're back at that 52-week high, 3rd of July 2024, close to around 1,800
Let's
rupees.
hope, though, that this time from here it climbs a little bit over the next few days and doesn't sort of taper off.
Otherwise, you wait for Valentine's Day and gift it on that, because on Valentine's Day it made a low of around 1,380 odd, and from there it's
Nifty Bank.
No, I'm talking about HDFC Bank. HDFC Bank made a low on Valentine's Day. Whoever was lucky and happy and big-hearted enough went and gifted that stock away. That person made 28% returns from there. That's on a lighter note. But let's get straight to the market action.
No, so yeah, HDFC Bank is, of course, coming off a little bit from the day's highest point, but it's still all banks. Actually, the private financials index, the Nifty private bank index is the top sectoral gainer. And, what's happened is that yesterday it was a pretty poor day for, financials all across. HDFC Bank was up 1%, and every other bank in the Nifty and perhaps a little bit outside of it was down between 1 and 2.5%. It's all reversed. So there is HDFC, which is still up almost 3%, but ICICI, Axis, State Bank of India. Actually, the top 4 contributors to the Nifty move that you're seeing are all banks. These 4 banks that I mentioned, HDFC, ICICI, Axis, SBI, they are contributing. Before I walked in, I looked at the table. They're contributing 120 points to the Nifty move that we have, the 130-point Nifty move that we have, 120 coming in from just these 4 banks. So, that's the kind of session that we seem to be having. Outside of it, that resistance that I did mention, we are trading just above it. That number is on the way up. The number is 24,236. We are slightly above it as we speak. We are at about 24,256. So let's see, we close around it or it's a decisive close once again and the market just sort of keeps flying. Outside of banks, what else is doing very well? It is a combination of PSUs, small caps and metals. So it's a lethal cocktail combination, whatever you want to call it. But that is the part of the market which is really flying away. And we'll talk more about this as we go along. Surabhi.
Absolutely. I mean, I was also looking at what's moving beyond banks. But even on the large cap screen, actually, it's not bad. You've got a lot of other participants as well. I'll just pick up some stocks as examples. Tata Consumer is having a good run. Right from the morning, that stock's been up. Now, actually, it's dethroned some of the banks to take the top slot on the Nifty. Tata Consumer is up 3.5%. Take some more examples. There's an Apollo Hospital. Power Grid is having a decent session. Coal India in sync with the PSU theme that Prashant just alluded to. So PSUs are having a decent session today. But even beyond, so the problem with the market in the morning was that IT was not performing and Reliance was not performing. Some of that is still true. If you look at the Nifty laggards, if you pull up the contribution chart, then you'll see that TCS, RIL, these are the biggest drags of the day. That's one stock that hasn't worked. But within the IT pack, now there's diversification happening. So you're seeing Reliance and TCS are the big drags. Infosys, now pull up the Infosys intraday chart. Infosys has moved to the other side of the screen. While TCS is still struggling, Infosys is perhaps it's done with a bit of a cool-off after yesterday's move. And the stock took off in the second half of the session. So let's see how this plays. Basically, it's a very diverse set of stocks, even beyond banks on the large cap screen. That's one good point. The second point is on the mid cap screen, just to show some stocks here. We were talking about the PSU theme. Look at Mazagon. Look at these shipbuilders and what they're doing all over again. Mazagon Dock, Cochin Shipyard, these stocks are flying all over again. Big move, 6-7%. Yeah, there we go. And look at an IRIDA. IRIDA is having a big session as well. We'll talk more about the stock as we go ahead. And then you have the low float guys who tend to party every now and then. And MMTC is doing exactly that today. MMTC is gaining on volumes and price on both fronts. But beyond PSUs, I mean, there are other names as well. Smaller names like GNA Axles, GM Brewery. So it's a fairly vibrant screen, even on the mid-cap side. So all in all, I think, plenty for a lot of traders out there today.
Well, that's right. And as you all were taking us through the market action, just take a look at a couple of stocks that were trading in the red that have actually been big movers. BHEL as well as India Cements, both of them from the low point of the day, have seen a sharp spike up. So I think we should get the intraday chart of both those two names. Just a few minutes ago, at the start of this hour, actually, both of them were in the red. They've already seen a big move in the recent past, but in today's trade, in the last 1 hour or so, they're seeing a big spike up from the low point of the day. Well, let's find out how do you trade the final hour of trade, because today we have the Nifty Bank as well that plays out the weekly expiry. Mitesh Thakkar is back with us. Well, Mitesh, the highs that we saw in the first hour, they haven't got revisited on the Nifty or even HDFC Bank. So give us your view on both these two names. On HDFC Bank, where does support lie? And on the Nifty Bank, what's the trade?
Yeah. Afternoon, Rajat. So I think, after the gap of opening, HDFC Bank has kind of gone sideways, given a mild pullback. But the other banks have picked up, Bandhan Bank, Axis Bank, etc. They've made days high. And since HDFC Bank enjoys the best of the weightage, maybe, that's why the Bank Nifty is also sideways. But being sideways after gap up is not a very bad thing. You might need a few hours of consolidation. I still believe that there is a chance of us recording a slightly stronger closing than where we are at right now for the Bank Nifty, expiry. And therefore, the traction could be on the upside. So maintain a positive bias on HDFC Bank particularly. With this gap up, I think the bigger support is around 1720, which was the earlier highs which the stock had done. If you look at the weekly charts for HDFC Bank, we got a highest weekly closing of around 1700 and an intra-week high of 1710 way back in December 23. And again, a closing of around 1690 and an intra-week high of 1698 way back in June of 23. So the 1700, 1720 band should be a very important band for the stock price. In fact, I would recommend any declines to those levels would be excellent levels to add or maybe take fresh long positions with a 20-30 point kind of a stop loss. So stay positive on both the Bank Nifty as well as the HDFC Bank stocks. And the good thing is that the other banking stocks are picking up.
Absolutely, that is the case today. Mitesh, what about stocks beyond banking? What else would you trade in the last hour?
So, in fact, I have a buy on PEL, Piramal Enterprises. Keep a stop at about levels of 910, look for a target of roughly around 970 to begin with. And eventually, once these levels are crossed, I suspect a 4-digit number can be tested here. And PFC is a buy with a stop at 520 for targets of 545.
Okay, all right. Got that, Mitesh. Thanks very much. We'll come back to you and get some more trading ideas going in a bit. But right now, let's move on. We'll introduce Prakash Diwan in just a bit. He's joining us on the show this afternoon. Get him on in just a second. But let's take a look at some interesting moves. I mean, right from the morning today, the power financiers, they've been in sharp focus and they've reacted quite well to a note that came in from Bernstein. Bernstein is sounding quite optimistic on power financiers, and it seems to suggest that maybe the financiers are perhaps one of the best ways to play the power sector itself. We have Sudarshan with the details on that note. Sudarshan, so what did you pick up?
So Bernstein has today come out with a note, and it has initiated coverage on both PFC and REC with a buy call, and target for REC for Bernstein is rupees 653 per share, and for PFC it's rupees 620 per share. It says both this PFC and REC are amongst most preferred plays in power cycle, and investors are underestimating duration and intensity of this ongoing power cycle, and NPA risk, as far as NPA risk is concerned, for both PFC and REC, it is much lower in this cycle, and both have better ROEs, that is more than 20%, and growth of 15%, which are much higher than peers. As far as valuation is concerned, it says even after the rally that both these companies have seen in the last 2 years, 1 or 2 years, it still remains cheap.
Okay, so Bernstein jumping into the fray, right? PFC, REC, and saying that there is 25-30% upside from sort of not these levels, but from when they issued the report, which was before today. Stocks reacting. We actually had the chance to speak with the power analyst at Bernstein. So, this was sort of a collab between the power and the financials analyst at Bernstein. Listen into some of what he told us.
From a loan book growth perspective, which is the key driver for earnings for them, we anticipate more than 15% loan book growth for each of them. So for REC, we have built in about 17-18% loan book growth for the coming 3 years. And in the case of PFC standalone, we have built in a loan book growth of about 16% or so for the coming 3 years, which translates to an earnings CAGR of about 12-13% on both of them for this 3-year period. In terms of the stocks we like, apart from PFC, REC, we like NTPC and Power Grid. Both those names we have been positive for quite some time now. So yeah, so these are the 4 stocks where we are positive within our coverage on the power side.
All right, so that's the Bernstein view on PFC, REC. But of those stocks, let's look at the longer-term charts. The thing is, they've all run. Not as much as a lot of the other sort of plays in CapEx or in industrials. But nonetheless, you've got about a 35 to 37% kind of an increase this calendar year on these stocks. And obviously a lot more. I mean, 200%, 230% if you're looking at a 1-year return. So they've moved. The question is there more juice left on this trade or on this investment? Let's ask Prakash Diwan. As promised, he's here with us on the show. Prakash, great to have you on as usual. So PFC, REC, would you be a buyer at these levels?
Good afternoon, Surabhi. So I do concur with the fact that there is growth that's very clearly visible given the focus on renewables and the need to fund all of this, fuel this growth. But, to say that in spite of the rally, in spite of the strong up move, they're not inexpensive is a bit adventurous. So I would stay away from that. And if I were to compare this to, let's say, a similar business, and that's IRE Day, which of course also has run up quite significantly. But given the fact that the articulation is very clear now that 5,000, 6,000 crores fundraise, which they will need to sustain, and you will see a commensurate drop in ROCs after that, you would still want to go ahead and buy that, given its runway to be much more clearer. So, between the 3, I think IREDA stands a far better chance to reward you and not recede or kind of go back very dramatically. REC PFCs, given the valuation historically and current elevated levels, could probably see some sort of a pullback. So I would play it a bit safe, though IREDA has also in the last 3 days done far well. But I would still look at that on dips.
Okay, all right. Hi, Prakash. Good afternoon. And I like the header of this Bernstein note, right? You love them or hate them, but you can't ignore them. PFC and REC, so that was the header of that note. But I want to ask you about BHEL, because there's an article on Reuters which is suggesting that the government has asked power firms to place orders for equipment worth around $33 billion to build coal power plants. And when you're going to build that, if you're going to be looking at equipments, then BHEL could be one of the potential beneficiaries, which potentially could explain why the stock in the last 20 minutes or so has suddenly seen a big spike up. It's already a 300 rupees stock. Your view on BHEL, has it run ahead of itself? Or given the kind of news bites that we are hearing and the kind of action that we're seeing from the centre, is it good for more?
So, Nigel, you're right. It's going to be difficult to ignore the news flow around this and it being so positive, distinctly positive. But, you know, if you look at BHEL, it's becoming a very pure order book play rather than an execution and a conversion play. At some point, the reality check of them being able to execute a lot of these orders and at what pace will matter. And to be able to do that, and of course, it's not that they're not aware of it. I'm sure BHEL itself understands the challenge, the impending challenge, given this huge order book build-up. The advantage will be to downstream vendors. You know, BHEL has a huge supply of EPC contractors, but equipment suppliers to support the overall delivery that it is expected to make. So, you know, and that ecosystem is fairly large. But if you look at that, I think there'll be much more promise, faster, accelerated kind of ordering and execution from that side, which will be more rewarding. And then these are small companies, mind you. So, you know, even a 100, 200, 250 crore order to some of these vendors makes a big difference. So I would go out there and look for those opportunities rather than BHEL, which I think will probably be stable at this level, except for a sentimental bump up once in a while. Fundamentally, I wouldn't give it too much of weightage to move dramatically from here.
No, absolutely. You know, so it's still all the power theme, right, Prakash? So this PFC, REC, this BHEL. So why not close this loop with by playing a quick soundbite of IREDA? We had the management with us on Monday morning, and stocks actually up 15-16% since then. Just a quick few soundbites, and then I'm going to come back to you, not about power, but I'm going to ask you about Castrol, Prakash. So think about that. But first, this soundbite.
It appears to be some 382% jump in sanction and some 67% jump in disbursement. But disbursement and sanctions by and large used to be in the range of 50% plus percentage. So, and if you see the sector, in general sector growth is there, but yes, we are always a little higher than the sectoral growth because of our strength in our core competency. As you rightly said, 30 lakh crore rough estimate of additional investment required, and out of which roughly if you take 70-30 debt equity ratio average, so around 21 lakh crore, 22 lakh crore will be required. And from that, if you see the March statistics, around 50% coming from bond market and 35% coming from NBFC and 15% coming from banking space. And in this 31% of NBFC space is with IREDA. And we are continuing, and the way we have done the sanction disbursement in this quarter, it is confirming that we'll continue to that, having that leading role in the time to come.
Okay, well, that is power, and that is the IREDA management. It's sort of buzzing again, and there is, of course, I mean, you know, you need, there's a lot of borrowing, of course, which is going to happen, and companies like PFC, REC, IREDA, they're all buzzing. I mean, all power lenders, renewables and otherwise. That's essentially the big tailwind. And, of course, on the other side, you've got equipment companies and utilities, of course, as well. All right, let's move on. Castrol, as promised. I mean, let's put the stock up. It's up, I think, about 15%. And it's having a move, isn't it? This week, it is up about 24%. That is Castrol India. Now, you know, we've had the management with us lately. If you can have the stock up, please, Castrol. We've had the management with us over the last couple of months, and if you look at the sort of growth numbers, projections, etc., they've told us that the industry, which is the lubricants market, will grow about 5%. The category will grow 5%. They aim to grow faster. That's essentially been their guidance. Margins that have been about 22% or so, and they said, well, you know, we'll try and expand it, but broadly should be in the region of between 22 to 24% over a period of time. So which they're already there, I think, at about 22 odd percent or so. But is there something new happening here? That is the question. And one buzz in the market is that, you know, they essentially are going to be launching a product in India, lubricants aimed towards data centers, cooling data servers and data centers. Now, you know, around the world, there's a lot of technology which is being experimented on with regards to how to cool data centers down because, you know, they tend to get very hot. I remember back in 2020, 2019, Microsoft, for example, for its data centers operated, you know, sort of built something and operated a data center underwater, you know, in the sea. And of course, they sort of discontinued that. They said we were experimenting if this is feasible. The buzz or whatever, the talk is that BP, which is of course the parent, has got products and Castrol is going to launch the product here in India. The point though is, I think, the total data center capacity right now in the country is about 800-900 megawatts. So it's not very large, but it's a very large growing opportunity, which is out there. And that's the reason why all of this excitement around data centers from various angles. Prakash, your thoughts on what's going on? Is it the excitement and sort of, around the underlying business, or do you think some of these new potential opportunities? Go on.
No, absolutely. And you explained it so well, Prashant. It's the cooling solutions, not the lubricant part, the cooling solution that, which is built around servers in data centers. And by the way, Castrol apparently has already introduced this in the UK market successfully. So it's not something which is going to take time in terms of acceptance and adaptation. It'll be probably very rapid. It's just a question of their ability to scale up with all the data centers that are coming up. So do they become the favored vendor to supply cooling solutions for the upcoming facilities? That's a big question. And the answer is, for a company like Castrol, which has been throwing up so much cash and really doesn't have much of avenues of growth, what do they do with growth? And this ends up being a very big, solution to this pain point. So at 24,000 crores market cap, if they were to kind of revive themselves with some sort of a growth which moves towards double digits, you probably have a very different profile of the companies, right? So that's what everybody is hoping for, and I'm not surprised at this enthusiasm because it's come after a long time. There was anticipation that something would change, and this is definitely something which seems very plausible. So I would believe it should probably be more in the news for the right reasons, and the stock will see some sort of accumulation once there's more credentials being established.
Well, that's right. Prakash, I think the stock is at its similar levels that we saw close to around 9 or 10 years ago when the promoter entity came and they sold some stake in the company. So as you said, I think, Prakash, some aggression coming back on the table, that's what the street likes. You're getting a dividend yield of around 3.3%, or they give dividend of roughly around 8-9 rupees approximately. And the promoter entity can't sell more in all probability because the stake has come down to 51%. With a lot of these, MNCs, the fear is that the promoter entity can come and take advantage. But for them, they've already brought it down to 51%. So that as well is not on the card. So put all these factors together, some aggression, valuations okay, dividend yield, and no selling overhang from the promoter entity BP. That could be one of those reasons as well. Well, thanks a lot, Prakash, for joining in, giving us your take on all of those stocks. We look forward to having a chat with you as the week does progress. For the time being, we slip into a short break. On the other side, we'll be joined by Sonam from Tata Asset Management to help us out with some insights into the market mood.
Welcome back. You're with us on Closing Bell. Let's actually get to some more stock-specific news. Gujarat Gas has been in focus. The company has hiked industrial gas prices. So let's get to the math behind this. Sonal, how much is the hike? What's the impact?
Well, you know, the company has gone ahead and hiked prices by 2 rupees per SCM to 44.68 rupees per SCM. This is as per sources which have suggested this price hike. And price hike is effective from 4th of July 2024. Now, remember, we've seen a sharp surge in spot LNG prices as well. They are at $13 per MMBTU. And this is a major source of raw material for Gujarat Gas. And that is the reason why they could have gone ahead and taken this price hike as well. Now, in terms of the analysis, a price hike would mean better margins for the company. However, it could mean low volumes for the company as well. Because remember, Morbi Association, which is the biggest customer for Gujarat Gas, is the one which can use propane if Gujarat Gas's pricing is higher. And right now, after this price hike, the differential or Gujarat Gas's product is 3 rupees per SCM, highly priced versus propane right now. So we had spoken to the Morbi Association just 20 days back, and they had indicated that propane is cheaper back then by 1 rupees per SCM. So with this price hike, it's a 3 rupees per SCM gas gap between propane and Gujarat Gas. But they did indicate that despite this higher pricing, they would like to stick with Gujarat Gas and they will continue to use all their volumes from Gujarat Gas itself. But surprisingly, they had expected a price cut, but now the company has gone ahead and taken a price hike. So there is a possibility there could be some loss in terms of volumes, and that's why maybe the stock is low by 2%, because yes, margins will go higher, but there could be a hit on volumes for Gujarat Gas.
All right, Sonal, thank you very much for that. So it's a neat explainer on the implications there. Sonam Udasi is with us. He's Senior Fund Manager at Tata Asset Management. He's with us to take some questions. Sonam, good to have you with us here. Good afternoon. Prashant this side. How are you guys behaving in the market? Or rather, what are you buying? What are you selling? Are you more buying? Are you selling a little bit? And where exactly are you doing all of that? So just give us a primer first, because I think it's been a while since we spoke, Sonam.
Yeah. Thanks, Prashant. We remain constructive, and luckily the market has started to broaden itself. In the last 2 months, there has been a lot of interest or perception around sectors which are large liquid, like private sector banks, IT, even consumption, and the expectation that the budget, could give more to the common man, has helped some bit of broadening of that space. So there is a lot of interest on the capex and industrial side. That being said, it allows us to sort of rotate some bit, weights. That being said, we remain constructive. Valuations are a little high, but the tailwind itself is pretty decent. We think economy is doing well. Inflation seems under control. Monsoon is likely to be okay. You cannot have the best price at all times. So we take what we get, and we remain constructive.
Just one thing, Sonam, and there's a lot of stories. I mean, there are always stories in the market, but some are true, some are not true. And when markets are booming, the percentage of stories which are not true go up. We've seen that across cycles. Are we getting to a point where one should start to get a little worried? Narratives and stories in that sense. Your thoughts?
I got your point. So we are, we are scrutinizing more, asking more questions for our investment thesis. So you're right that sometimes narratives get ahead of the reality. We think that there is still some scope, both on the industrial side with the government focus on manufacturing. While there is scope for doing more, for the common man and spending, rural spending, etc. The bigger delta for India on a GDP front would still come from manufacturing, because services is, we are already at 54%. Agri, we are trying to do something, but the next level of employment that that you can generate and get some investments in is from manufacturing. So on the broader side, while there may be narratives on some of the themes and there are names and specifics, etc. That being said, the overall tailwind on government policy, capex, businesses, and also the China plus Euro plus theme, that continues to remain resilient, and I think that will take us more time. Do remember that a lot of the manufacturing sort of wilted away when nothing happened for 10 years and there was no kind of return. So whoever is there and is left standing has consolidated and sort of become bigger, and therefore in some of the cases you are seeing order books 5 years plus and all that. So some of it will wilt away, but there is tremendous strength in some of the narrative where you can find some reality. I was hearing you speak to the previous guest on power and etc. That theme looks real. There is a deficit on the India side. There is a lot of demand on power itself, and then you want to do data centers and semiconductors. So that theme is very vibrant. Within that, then you have to choose which companies or stocks have run ahead of the fundamentals and then take a view there.
Sure. And when we're talking about stocks running, PSUs can never be far behind. I just want to point this out. We were discussing BHE. There are lots of other stocks. Just pull these up. Hudco is now building on those gains. There's RVNL, IRFC, lots and lots of names that are pointing to the north side. Even some of the metal names, SAIL, NMDC, a lot of stocks, PSU stocks, seeing more incremental buying this afternoon. So that's one part of it. The other is banks and tier 2 banks. Just wanted to pull that up as well. So if you're looking at the likes of a Bandhan today or a Federal today, there's a lot of buying, 4 to 5% up on these stocks. Federal's, of course, update was excellent. We saw the numbers with the advances growth looking very, very robust. But the others are also, there's general buying across the board in banks. Sonam, hi, good afternoon. Great to have you with us on the show today. So let's talk banking, because finally the elephant seems to be moving. I'm talking about the large blue chip bank space. But from an investor's point of view, what's the better bet now? Should you look at some of the tier 2 names like the ones that are doing well today? Should you just go back to the basics with the likes of an HDFC or ICICI? How would you look at positioning the portfolio?
So I think within banks, the good thing is that overall, whether it's a large bank or a medium bank, the valuations are still within longer term trends. There is still, balance sheets are robust, NPA cycle remains under control for all banks. ROE profiles are decent. So for us really, it's relative where we think credit costs can move up. And we want to tinker with that, and this is one portion of the market where I can say that valuations are palatable, and that valuation is not a concern. So we are doing both. We are doing both mid and large wherever we find our comfort. More importantly, we are looking at themes which can be more longer term. Where people are spending more on digital, making their systems robust and underwriting robust, and if we find that whether it's a large or mid, we are looking at it constructively.
Hi Sonam, good to see you on the show. Thanks a lot for joining in. I recall, I think you all were part of the initial investors in Metro Brands. You'll still hold on to that investment?
Yeah, we do.
All right.
But the specifics, yeah.
That's something that we have discussed in the past as well, I think. So when I recall, even a few months ago or maybe a year or so ago, you all continue to hold on to that position. It's been a good one for you all. But let's spice things up a little bit. Besides that, in your portfolio, I think you had stocks like Radico Khaitan, you had United Spirits. We had a new listing, by the way, Allied Blenders as well, and that management as well sounding very, very confident. So it seems there's a fair bit of penetration in this space. What is your view, in terms of all these stocks? More focus on P&A, that's what's helping margins. You have input costs that have cooled off as well. these stocks, well, they're dancing away to the bar, not to the bank.
So bar and bank look similar for both of them, really. That being said, I think the broader theme, the way I look at it is that as India gets richer at the margin, you will have people who are living it up in certain cases. Valuations are rich, there is no doubt about it, but there's fair bit of longer term trend legs here. There are few listed names that are available here, and investor interest is therefore high here. We think longer term, over the next 5-10 years, the volume growth would continue to be decent, point to point, and India is a young country, this space should therefore relatively tend to outperform the broader sort of consumption basket.
So, what else part of the portfolio? Radico, I think you all had United Spirits. Both those two, or do you all have other
So
stocks?
within the liquor space, these are the two. These are the two that we own.
All right. What about Zomato? I recall you all had that one, and now suddenly everyone's very excited. I remember when the stock had fallen off the cliff, there were a lot of naysayers, but they have been proved wrong because the stock is nearly around 200 rupees and there's plenty of interest out there. The only problem is there could be a formidable competitor coming in there to challenge them. How do you view it?
So I think the space is large enough, and in this, the innovator and the guys who are ahead in the game tend to have a lion's share of, the overall profit pool if there was one. Our view is constructive currently. We think there is both delivery and e-com that is playing for it well for it. There will be competition. That being said, it's early days, nascent days, especially on the e-com side. I think they have a good strategy. We are constructive. That's what I would say.
From a slightly broader perspective, when we're discussing consumption, Sonam, I think a lot of people are wondering whether you have to shift the focus, towards the upper end of consumption or the lower end. Because now, for instance, the two-wheeler makers, the auto guys, they've had great sales and they've really started doing well. Even tractor sales are looking good. For instance, we heard that from M&M this time around. So the question really is that do you continue to play top-level urban discretionary consumption, your jewelry stocks, etc., or do you now shift some of that focus or that balance in favor of regular staples or maybe any other way of any other format of rural consumption?
Our thought process is very clear in this, that over the next 5-7 years within consumption, the food, as more women are joining the workforce, whatever makes their life easier would do well as a category. So be it consumer appliances, be it ready to eat, be it food processing, that component of consumption we think would outpace everything else. And within that, if it's a rural focused or a urban focused, we look at, and there are many names there. So we tend to be overweight there. Relatively, we think the other portions where penetration levels are quite high and it will be more volume led, we are slightly underweight in that space. Spaces where, the penetration is low. I talked about consumer appliances. There is a low penetration on durables across India. There are decent players, market leaders. Even in, eating out is a theme that will continue to go up as more, both men and women continue to work. So I think that portion of consumption is where we want to sort of be, have a larger position in than the old, staple names that may be more volume led. So tactically for the budget, we might do something for staples.
No, got that. Point taken.
Sorry.
So maybe a tactical view, not a slightly more structural kind of viewpoint at this stage. Thanks very much, Sonam, for joining us. Great conversation as always. and look forward to our next one. 160 higher on the Nifty. We're up at about 24,283. We'll take a break. We're back. We'll get you some short-term trading ideas with our experts. Stay tuned.
Welcome back. Well, these PSUs are coming back into flavor today. You have IRFC now that's up closer on 3.5%, and bulk of that move has taken place in the last 10 minutes. I think the intraday chart of that one should come up. BHEL that we spotted earlier, if there's going to be a power equipment push, then that one stands to gain. So that one as well has spiked up. And I think BEL as well is now participating on the upside. So some of these stocks, they're moving and they're moving with high volumes actually. So that's the encouraging part of the move that we've seen in the last few minutes or so. BHEL, that's the one that's really bursting away as we speak. Mitesh Thakkar is back with us to help us out with a buy or sell call for a reverse trade in the next few days. Mitesh, tell us, what do you have on your radar?
Yeah. So, the market still remains pretty good. So we'll trade with more of long bias. The BTST and Cochin Shipyard, now it's a cash stock, but it's trading at a fresh high with, good setup. So rather, it can be a 1-2-day call with a stop below 23.95. Look for targets of around 2,500 to begin with, and it can also be a BTST, but then the stop loss will be tight for a stock which has got higher volatility. And the other one is RBL Bank, BTST here with a stop at 267 for targets of 275.
Got that. Mitesh, what about names like what Nigel was mentioning, BHEL, etc.? BHEL and a few others in the power space where there is a fair bit of momentum. IRDA, for example, is up another 10% today.
Yeah.
Yeah.
Prashant, we had a buy on PFC earlier. I like BHEL as well. And, that's also something which if traders are comfortable, they can take long positions. The stop loss would be roughly around 306, half 306 maybe. And target of 330 can be looked at.
Okay, all right, got that. Mitesh, thanks very much for all the trades today. You have a good rest of the day and we'll touch base again tomorrow. For now, let's get to an exclusive conversation. Our colleague Rachna caught up with our Janki Raman, CIO Emerging Markets at Franklin Templeton, India, on the sidelines of their NFO launch. She started off by asking him about the rationale behind launching this NFO at a time when the markets are at new highs and valuations, some can argue, can be expensive. Take a look.
Markets are indeed at an all-time high, but the more important point is we are in the beginning of a fairly strong growth recovery. So on the back of this, both macro growth as well as corporate earnings growth are likely to be quite strong, so which means that even with the handicap of a slightly higher valuations, investors can make respectable returns in this period. So that is the reason for launching the product at this time. The primary reason is that growth outlook looks extremely promising.
Which sectors excite you per se?
So we are in the early stages of a growth phase, so which means that by and large this rising tide is going to lift all the boats. Every cycle also brings up some new themes. So this time also there will be some new themes like internet-based businesses, energy transition-oriented businesses. Those are the new themes, and those carry the excitement of that novelty factor as well. So we will look at all those things, and I don't think I can single out that in this cycle these are the sectors that are likely to perform. I think this is going to be a fairly broad-based rally, but some of these themes will be new and they will be more exciting to analyze.
For the investors as well. Speaking of investor interest, budget is just around the corner, anytime in the third week or the fourth week of July. Are there any expectations you have from the government in terms of policies or any sort of encouragement for investors?
I think by and large the most significant aspect of the past few budgets has been policy continuity. Government has been quite consistent in its approach, which is promoting stability in taxation, focusing on investment spending, improving the efficiency in the economy. We as investors prefer stability and predictability, so which means that this budget also we wanted to continue in that same direction. Of course, tactically you may see some higher allocation towards rural welfare spending. Given certain one-off incomes like those RBI dividends, I think government can do that without stretching the deficit numbers too much.
All right, so that's a view from Franklin Templeton. And now we have Mayuresh Joshi joining in. He is, of course, from William O'Neill. Mayuresh, great to have you with us on the show. So the first big question is obviously the big stock that's been making headlines since last evening, and that's HDFC Bank. The anticipation is running really high. But the question is that has the market already priced it in? And then if that's the case, then whether HDFC Bank will have enough sort of merit on its own in terms of earnings, in terms of growth, to really do that big dance, the big jig. What's your sense? And, what would your call be on the stock now?
Afternoon, Surbi. Oh, yes, I think the elephant has just started dancing on one foot. So I think as the numbers start getting better, I think the dance will become even more vigorous to say. But jokes apart, I think the expectation in terms of a solid earnings recovery, specifically on the HDFC book per se, that is going to be gradual. So one can't really expect wonders to take place, say, in this quarter or the coming 2 quarters. It is going to be a gradual process as they start maturing the HDFC book and cross-selling it to their customers as well. They've obviously got access to the low-cost deposits from HDFC itself. So at some point of time, as the rate cut cycle starts happening in the Indian context as well, there is going to be incremental revision back to mean, not to the absolute means that HDFC Bank used to report, but the combined NIMs and spreads should be relatively better as both revenue and cost synergies start building in. Last but not the least, I think at Markets Petia, William O'Neill, our belief is that numbers should be relatively better as we head into the second half and keep on improving as the base starts getting created for FY25. So FY26 numbers will be relatively stronger, better as we look back in FY24. So yeah, I think we remain optimistic on this stock. EPS RS rating looks fine. And our take is that a genuine earnings recovery will start through for HDFC Bank in the second.
Okay, all right. Hi, Mayuresh. Good afternoon and good to see you in. What's your view on Z, a 150 rupees stock? Plenty of bad news. But is it all in the price at 150, or you say plenty of better options. Just stay away from C.
Afternoon, Nigel. I think the price damage has been done. So I think all the bad news is now getting gestated into the price. Albeit, as you rightly pointed out, I think there is still a lot of ifs and buts related to what may or may not happen. And therefore, the reactions can be adverse at both ends. It's always better to have absolute clarity, even if the stock moves up before that. But there is clarity in terms of the next steps forward. There is no harm buying the stock in terms of price a little bit higher. Having said that, I think the spaces that we're probably looking at this juncture are auto ancillary stocks where we believe that earnings growth will still continue within the broader markets and the mid-cap themes. There are a few of the real estate ancillary plays as well. And we are very, very constructive on a few mid-cap pharma names as well. So our belief is that these pockets is where earnings growth and earnings momentum might very well.
All right, Mayuresh, stay with us. There is about 10 minutes to go for market closing. We'll take a quick commercial break here. We'll come back and address the rest of the market, which is doing very, very well. Stay with us.
Welcome back. You're with us on Closing Bell, and we're in the last leg. The markets managed to actually, have a pretty good session. In fact, now as we're closing up, it's almost back to the highest levels of the day. Let's see if we'll get that close above 24,300. Mayuresh is with us. Mayuresh, so time for some stock ideas, which is the toughest part in this market that's sitting at an all-time high. But to tell us, putting fresh money to work, where are you doing it?
Well, absolutely. As I said, a few of the auto ancillaries is something that we are liking. So, for example, Varroc Engineering is something that we believe can do really well from here. If you look at the annualized numbers for FY24, they did a top line of 7,500 crores with an annualized margin of 10.1%. For quarter four, the margin was even better at 11.1%. So the most interesting part for Varroc is that they have won orders in excess of 8,500 crores for the better part of the last year and a half. And 40% of these orders are from the EV portfolio. So their existing EV portfolio, which stands at 5%, is going to see a significant bump up over the next few quarters with better margins. The debt equity has come down to 0.63 from 1.27 from FY23. And therefore, the operating leverage will play out as debt gets reduced even more in the next financial year. So Varroc is something that we continue liking from the auto ancillary space. The other stock within the same space is Gabriel India. Our take is that the kind of numbers that Gabriel has posted for the last financial year, EBITDA margins around 10.1%, they should be able to substantially improve that. What they're actually doing, Surbhi, is that they're expanding their sunroof capacity quite significantly to 4 lakh units. And they've got some big orders on their way, both in terms of Kia, Hyundai, which should sufficiently ensure that the utilization levels go significantly higher in the next year and the year after that. So on a compounded basis over the next 2 years, earnings growth, which we track at Markets with India, should be in excess of 20-25%. Very strong balance sheet, and therefore return ratios should show significant improvement. One mid-cap pharma stock that we like is Morphin Labs. Now, the interesting part here is the medical devices market, where they've got a market leadership position in the glucometer and the BP monitor as well. The product sales is one part. The strip sales is something that does magic for them. So I think the strip sales are in much more quantum than the product sale itself because of regular use and testing that is required by the end user customer. And therefore, the kind of cash flows that the medical devices does for them is significant. Their API business has held up significantly well, and they're expecting few key launches to also happen in the next few quarters and years as well. So consolidated, I think top line margins and bottom line growth should be quite significant.
Mayuresh, any view on Indus Stars? You know, the dips are getting bought into. I'm observing the stock on a day-to-day basis. Now, all these telcos are coming back in shape. So, you know, they're in. So, obviously, it's good because they'll get their dues. They're more B2B in nature. Trades at a discount in comparison to its global peers. Any view on it? You know, the stock was down yesterday. It's up close to around 3.5% odd. And if you pull up a 2-week chart, it's moved from 340 all the way to 400 rupees.
Oh, absolutely, Nigel. So any pullback becomes a good opportunity to get into this one. As you rightly pointed out, I think the expectation in terms of the sustainability of Vodafone Idea means that the tenancy ratios as part of the telecom business should hold up very, very smartly. Now, I was reading a report globally in terms of telecom tower valuations and the kind of acquisitions ATC has done, the American tower company, over the past few years. I think the need is going to be much more in the next few years as well. And therefore, from the telecom part of the business, tenancy rates and tenancy ratios improving is a good sign. The industrial part of the business for Indus Stars should also hold up pretty well. And they should have a very, very manageable control in terms of their entire cost structure, which means there should be an improvement in the margin profile as we head into the next few quarters. What this really does is it improves their cash flows, and the net debt, which has gone up in the last few quarters, should start coming off. So the deleveraging effect on the balance sheet will also improve their return ratios. So yeah, I think it's a good story. Genuine long-term investors can wait for pullbacks to play this.
Okay. All right. Mayuresh, good talking to you. Thank you very much for being with us and giving us a lot of those stock cues and ideas. We look forward to more conversations, but for now, we do have to get down to what has been another very strong session for the market. Look at the Nifty, 170 plus and almost closing at all-time highs, powered all the way through by the Bank Nifty. The mid-cap market didn't do too bad either. The mid-cap index also closing towards the highs of the day with a gain of nearly 1%. So the story of the day really was banks. The one that was sort of leading from the front, HDFC Bank. Now, that's not ending at the highest level, but nonetheless, there's a 2% gain on all that excitement around the possible increase in weightage in the MSCI indices. But the top winners on the Nifty, in order, Tata Consumer, almost a 4% gain pushing over there. Adani Ports has had a good session. Adani Enterprises also, last I checked, was in green, and it is about 1% higher. But then it was like really, as I said, a day belonging to the bank. So let's list them out. Kotak Mahindra Bank, 2.5%, SBI, 2%, Axis, almost 2%, IndusInd, all of them really participating, doing well. Even Bajaj Finance from the non-bank but the financial space had a good session, 1.5% higher. Then you had other constituents. HUL, Britannia, Coal India from the PSU Space Power Grid, telling us that it was a very well-rounded sort of a session, so not too many losers. In fact, on the losing side, Reliance is the one that stands out. It was down throughout the session. A lot of the IT stocks that started the day negative, they've all moved on the positive side as the day closes out. So, well, on the large caps, very, very strong.
Okay, all right. Well, on that note, though, we'll have to wrap up on this edition of